Hi, I'm Ethan Devitt, and welcome to 50 Faces TV. We are back here with Arun Kelshiker for part 2 of our special series focused on sustainable finance and responsible investing. As a reminder, Arun Kelshiker is former head of asset allocation and portfolio strategy at Standard Chartered Bank. He is now involved in a range of projects, including stakeholders such as EBRD and University of Cambridge, where he focuses on issues around sustainable finance and responsible investing. He's a board member of Philanthropy Impact, as well as vice chair of CFA UK's investment committee. Welcome, Arun. Great to see you here.
I'm glad to be here, Ethan.
And in this episode, we're going to focus on the sometimes vexed issue of DEI. From my perspective in the US, DEI is sometimes one of the only aspects of ESG policy that maybe many public pension funds agree on. There is a widespread practice of requiring diversity tables and on requiring that many managers in the manager selection process would be asked to show evidence of not only diversity within their organizations, but how it is improving and how individuals are progressing through that organization, i.e. a sign of change and impact. Let's talk now about how this concept is translating into Europe. Arun, can you speak about how DEI is becoming a part of manager selection decisions for investors?
So DEI is playing or is continuing to play a larger role with respect to investor asset manager selection, especially on the part of asset owners. And I think there are some strong data points that are sort of supporting that description. So, for example, Alan, in their 2024 asset managers DEI survey, basically, concluded or sort of shared that 70% of asset managers basically have a DEI policy in place. For example. And then we've also had other data points, some very good research that's been performed by Pensions for Purpose that have shared on the asset owner side that asset owners have high expectations of the way in which their asset managers are implementing DEI within their investment strategies and processes. They are also, they also believe that there is a very clear linkage between business performance and DEI as well. And their own expectations also sort of transcend across to their service providers. So this whole idea of DEI being better for business, being better for society is something which has resonated with asset owners. What's been interesting is that while we've seen that within financial services institutions. So while DEI policies are being implemented and sort of continuing to grow in terms of their sophistication, employee resource groups and the like, what's interesting is that within the context of investments, we're not seeing asset managers actually action or take negative actions against companies that aren't implementing DEI. So that was one of the red flags that was raised by the Pensions for Purpose report, which was shared earlier this year, that while, for instance, we're looking at, issues like the climate crisis and divesting from fossil fuels with respect to companies that aren't performing particularly well on the DEI front, investors aren't at the point where they're sort of calling companies out to the extent of reallocating that capital towards better performing companies on DEI metrics. So that's something that is probably important to be aware of. So DEI is an industry issue. The FCA have had a couple of consultations in recent years, kicking off, over the course. I think the original one was in 2021, and now more recently one last year, where the conversation is really to sort of bring DEI at the forefront of financial services organizations, and the idea that poor behaviors are things which aren't good for our industry, and they're not good for cultures within financial services institutions, and potentially could have ramifications and far more serious consequences. For instance, hitting fit and proper criterion. In recent years, over the course of recent years, we've had numerous scandals, and I sort of think about the ones at the CBI as well as OD Asset Management. And off the back of that, at the Diversity Project, where I'm also involved, we set up an initiative called Safe Space, where people can report and call out everything from poor behaviors to microaggressions through to appalling behaviors, and basically share that, anonymously, or to share that, naming the incident, and sort of for us to try and gauge as an industry how the extent to which we have these kinds of activities take place within our industry so that we can continue to sort of drive better DEI practices across financial services in the UK. So there is a lot of momentum behind DEI within financial services. The FCA and also the PRA as well have jointly talked about increasing their scrutiny with respect to high quality DEI practices, and it's something that we're continuing to drive. It also follows suit with respect to what we've seen on the corporate side. So, for instance, we have disclosures of listed corporates in the UK with respect to gender, with respect to ethnicity, and certain targets there as well. And while those have been increasing, and basically we're seeing better representation within corporate boards and senior management teams, there's still a lot of work that needs to be done.
Well, a fascinating discussion there, and thank you so much, Arun, for the work that you do with the Diversity Project to continue to push and amplify this issue. As always, it is ahead of its time in drawing attention to this issue and moving us into those safe spaces that you discussed. Thank you again for coming here on 50 Faces TV and for sharing your insights with us.
Thanks very much, Ethan.
I'm Ethan Devitt. Thank you for listening to 50 Faces TV. Don't forget to tune in for part 3 of this series on sustainable finance and responsible investing with Arun Kelshiker as a guest.